In this lecture we are going to take a look at a long trade example in the Euro 30-minute chart. I would say that this is one of those difficult trades to catch in real time because of the subtlety of the entry process. One thing that must be clear to you is that the entry method, depending on the methodology, can be considered an art form. That's not caprice. It's because price can always do something different and unexpected at these crucial points. In the chart you see on the screen, you can notice that there is a small amount of price information. This does not necessarily mean that the analysis will be easier, because highs and lows can get confusing pretty quickly. Observe that between numbers 1 and 4 we have an expanding pivot formation, which is when a higher high is followed by a lower low or vice versa. This is a problem because it creates too many possible outcomes for price. However, the market vector from 5 to 6 clears up the mess and states that the market is indeed going in an upward motion. The object of study of this chart will be centered around the candlestick number 6, which acted as the von Restorff effect portion of the tridimensional axis of manipulative market maneuvers. There are many interesting features about this candlestick, but let's give it some context first so we can analyze it better in a later moment. When price was up there in high number 6, we have a few undeniable facts in the chart. We can safely say that lows 3 and 5 are solid market structures because buyers were successful in proving their point after these specific lows. Look at how price creates a new high after low 3 and after low 5. All this means is that these lows can be used as axes for us to observe what price does in the future. One other detail is the low number 1, which was part of the expanding pivot. Look at how price lands exactly in the low 1, which also happens to be in the area where buyers took control after low 3. The low that was used as a target for the manipulation in this chart is low number 5. We can tell that by the size of the candle falling right into it. When retail traders see that candle 6 falling that way, they are almost certain that low number 5 will be a good place to put a sell order. On the other hand, we already know that this is a trap. Candle 6 is the most obvious representation of a von Restorff effect that you will ever find. It does not get any more obvious than this. Take a look now at where the lower tail of candle 6 landed and how the candle closed. It washed the retail traders from low number 5, but it also landed almost exactly in the line identified as the primary axis of the expanding pivot formation. This line also happens to be in a buy zone around number 3. Observe that we have a regular wash line, a sloped wash line, and a line that marks the origin of the expanding pivot. There are many possibilities here. We could open a position at the third touch of the sloped wash line. We could also wait for a second touch of the regular wash line. We could wait for a second touch of the expanding pivot line, or we could open a position in the open of the next candle. There are all of these possibilities here, and it's impossible to know which one of them is going to be the best or if price is going to respect all of them. The position you see on the chart was opened at the third touch of the red sloped wash line simply because it is the line that was tested the largest number of times with success. The stop was placed below low number 3, and the target is simply the multiplication of the stop by 3 to give us a nice risk and reward ratio. Low number 3 seems to be a better choice for a stop due to the volatility of candle 6 and the fact that we have an expanding pivot formation on the chart. Let's see how the market develops. As you can see here, you could have used any of the 3 lines to enter this trade, and you would be successful in all of them. However, keep in mind that this is not always the case. There will be times when the market simply will not reach the line you want, or it will simply do something unpredictable. That's part of trading. Thankfully, we have the mathematical and statistical advantages of good risk-reward ratios to help us overcome these difficult moments.